Thanks, Sally, and good morning, everyone. It's great to see everyone here today. And this is actually my first time in Perth, and I'm actually really excited to be here to be sharing with you mainly about the lithium market. And we'll also go a little bit into what we're seeing in terms of the power battery trends globally, as well as what's happening downstream for EV sales. So just an introduction for those who may not be familiar with the Platts name. We're actually a leading benchmark provider across several commodity markets, notably in oil, LNG, but particularly in Australia as well. You may be familiar with our Platts iron ore, the IODEX, as well as the alumina indexes. So for battery metals, we actually rolled out a suite of battery metals starting in 2018 and actually starting on the lithium metal space. We've since expanded our assessments to include all four major battery metals, so including cobalt, nickel, manganese. And we're still consistently growing, our suite of battery metals as we see growing liquidity in this space. So, and now we come to the focus for today's sharing, which will be on lithium. It's quite an apt topic to share today here in Perth, which is responsible for, I think, more than half of the global lithium supply. And I'm sure many people here are also curious about what's been happening in the markets and why we're seeing such a downturn in the spot prices. So here at Platts, we actually assess a few lithium prices. First, we have an assessment for the domestic Chinese or DDB Chinese lithium prices. And we assess both the carbonate as well as hydroxide prices. Now, some of you here may wonder, why are the carbonate prices actually higher than hydroxide in China? So this is actually due to the dominant battery chemistry in China. So when we talk about power batteries for EVs, there are two main types of chemistries. The first being nickel, cobalt, manganese, or NCM. So this is dominant in the rest of the world, which pursues possibly driving range. It's also more developed outside of China. However, within the Chinese market, there's been a very strong emphasis on lithium iron phosphate, or LFP. So this is a type of technology that does not use any nickel, cobalt, and manganese. It has a very strong cost competitiveness versus NCM. However, because it does not contain any nickel, so it does lose out a little bit in terms of energy density. But in China, we do see that LFP has become quite dominant compared to NCM because of the availability of public charging infrastructure. So there's actually a lot less range anxiety in China, and this actually allows the development of LFP in China. So LFP actually uses lithium carbonate instead of hydroxide. That's why we see that there's a lot more demand for carbonate versus hydroxide in China, and that's why prices are actually typically, trade at a premium compared to the hydroxide price. Now, if you look at the Chinese prices, you can see that across 2021 to 2022, prices actually practically went vertical. So it was actually very much a strong demand-driven story. We saw particularly between 2021 to 2022 the impacts of limited supply, but very strong demand growth in China. As many of you here may be familiar with, during 2018 to 2020, there was a low price environment for lithium, and that actually kind of stifled investments into the upstream mining sector. So when we come into 2021, 2022, seeing very strong growth in the demand space, obviously supply, is trying to catch up. And therefore, we see prices pushing up towards a historical peak of nearly 600,000 yuan per metric ton. So at such high levels, for the first time in a decade, we actually saw battery pack costs rise. And this actually caused some of the consumers downstream to start to push back against strong lithium prices. That's why we saw that in the last quarter of 2022, some consumers, they were starting to be more resistant towards higher prices. This led to a downturn in lithium demand. So we saw that prices started to track down. And as we enter into the first quarter of 2023, that's when we started to see a much sharper decline in lithium prices. And there were a couple of reasons for this. First, because of the scrapping of EV subsidies in China. So actually, this caused some consumers and downstream consumers to pull forward demand from 2023 into 2022 because they wanted to take advantage of these EV subsidies before they were rolled off. And then another significant short-term challenge that we see in the Chinese market. So first of all, they're actually, sitting on quite a fair bit of battery inventories. If we look at the power battery production statistics in China, versus the actual installed volumes in EVs, you will see that the production volume is double that of what is being actually installed. So clearly the supply chain is actually sitting on quite a fair bit of inventory. They're at a stage of destocking now. And in the short term, they are also facing very strong competition from ICE vehicles. And some people may wonder, isn't China actually going on a strong track towards electrification? So this is true. But one of the issues is that in the ICE vehicle space as well, China has actually been tightening its emission standards. This is true for every other country in the world as well. But particularly in China, in July, we will see the rollout of the 6B emission standard, which is actually widely considered as one of the most stringent emission standards globally. So what happens is that, in 2021, 2022, because of such strong growth in the EV space, it's actually eating into the market share of ICE vehicles. So reasonably, a lot of these OEMs, they are sitting on large inventories of ICE vehicles as well. And some of these cars cannot be sold after the rollout of the new emission standard. So we've seen in February and March that some ICE makers, they've been offering very aggressive discounts, up to 40 to 50% of the unit price of the car, just to offload the car, because they can't sell this car anymore after July 1st. So this is actually viewed as, I think, quite a significant short-term challenge for EV makers in China. Not to mention that in February, Tesla also slashed prices for EVs in China because they wanted to solidify their market share. So I think in the first half of 2023, we're looking at quite a tough time for the battery sector, EV sector, for the refiners as well. But one bright spot that we see is that towards the end of the graph here, we're actually seeing a bit of a slowdown in the decline in prices. So some refiners are actually holding back, watching the market. We do hear that there is some slight improvement, but because there's still not a full return in market confidence, some people are still holding back from buying big volumes in the market. So in general, I think the sentiments that we're hearing from the Chinese market is that we'll probably see some more significant improvement as we enter into probably the mid or end of the second quarter. But again, it really depends on what happens downstream in terms of EV as well as ICE demand. Now, if we look at international lithium prices, so apart from the Chinese prices, we also roll out an assessment for the CIF North Asian prices. So after China, we do see that the most liquid spot market is in Japan and Korea, where a lot of the cathode as well as battery makers, they are actually situated. And what happens in the Chinese market tends to influence what happens internationally as well. This is because China is actually a major refining as well as export hub, particularly for hydroxide. Now you can see on this graph here that outside of China, we still see hydroxide trading at a premium to carbonate. So as mentioned earlier, this is because of the dominance of the NCM technology outside of China. And we do see that, the price trends have also been tracking kind of what's happening in the Chinese lithium market, but not at such a sharp decline. So the reason for this is because outside of China, a lot of lithium is actually tied up in term contracts. For most, consumers that we speak to, they perhaps only have, a 10% or even less than that allocated towards the spot market. But in terms of pricing, we have observed, changes in terms of how they price the term contracts. I think several years back, we would still hear of multi-year fixed price contracts at $20 to $30. But in this kind of situation, when demand is very tight, we are seeing a very strong push towards indexation in the international market. So a much stronger emphasis on what is happening in terms of spot prices as well. So in general, in the international market, we are still seeing stable demand, but downturn in lithium prices in China is also causing some jitters in the market. So we do hear, for example, from some consumers that because they see that Chinese prices are lower, they are also bidding lower to Chinese refiners. At the same time, actually, if we consider where the international price is now converted to a DDP Chinese basis, there's still a fairly big arbitrage. So some refiners are also looking towards the export market, trying to take advantage of a better market internationally. However, the pie is quite limited. So we don't expect to see, a large flooding of material into the international market in the short term. There's just not as much demand on the spot market. And qualification is also, quite strict outside of China. There are only, perhaps a handful of hydroxide refiners in China that can actually export to these consumers. So one thing that we would be keeping an eye out on, for example, would be near the end of the quarter when they start negotiating the term contract prices for the next quarter, whether there's going to be any changes in terms of the index or how they're going to negotiate for differences in QPs and such. And now we come to perhaps, I think, what everyone here is most interested in, what's been happening in spodumene as well. We've seen increasingly that lithium chemical prices in China, in North Asia, they have some influence on the spodumene price as well. For example, in 2021, 2022, because of how tight demand was, we also saw a historical peak in prices for spodumene. So this was pushed up by higher spot deals that we observed in the market. And when we tested this data with buyers in China, for example, they also came back with the same feedback saying that, the market is tight. If you want to buy material, that's kind of the level that you have to pay to secure the material. We also do see increasingly that a lot of spodumene term contracts are also considering or moving towards indexation to take advantage of what's been happening in the spot market as well. But of course, in recent, through the recent quarter and perhaps actually since November last year, because of the downturn in chemical prices, we are also seeing some pressure on the spodumene price. So we do see higher resistance from some converters in China because when they consider where is the spot price now, so for example, in China, the lithium carbonate price is trading at about 300,000 yuan per metric ton. That's half the peak price that we saw in November in 2022. So considering where the lithium chemical price is now, when they back calculate to see what the spodumene price would be, it's actually much lower compared to what they're getting on contracts. So some of them feel that if I had to buy something on the spot market, I would bid much lower. But on the supply side of things, we see that supply is actually still pretty tight. So I think in the short term, what most people expect is that we are seeing some form of a correction in the spot prices. But in the longer term, while we do see growing supply of, for example, African material or even domestic Chinese lepidolite supply, these supply sources actually do come with their own set of challenges as well. They do help to alleviate the supply tightness, but it may be quite challenging for them to become a mainstream source of material in the market. So for example, if we talk about African material, most of the commercially announced mines, they will only be producing in 2024, and that's barring any technical issues that might cause delays. And if we talk about Chinese lepidolite supply, it is also of a lower ore grade. It actually produces quite a significant amount of tailings. So dealing with these tailings is also a huge issue. Some of you may have also seen in the news, I think a couple of weeks back, that the Chinese government had actually cracked down on some illegal mining activities in the Yichun province. So that's where most of the lepidolite mines are actually situated. So while there's still a small, this proportion of illegal mining versus the actual, certified converters is quite small, but many people in the market take this as a sign that the government is getting quite serious about environmental regulations. This may actually also stifle permitting for future lepidolite supply. So while in the short term, we do see that there's quite a lot of challenges remaining, in the longer term, actually, we're still probably looking at quite a serious sustained deficit. Now, in my role as a price reporter, I'm not supposed to make any forecasts, but what one of my colleagues did was that he tabulated all of the announced mining supply that is expected to come online by 2030. And we compared this against our own internal data, a forecast about where lithium chemicals demand might look like in 2030. And we will see that even if all of these mines come online on time, we are still looking at a sustained deficit of at least 220,000 tons on a lithium carbonate equivalent basis. And as many of you here may be aware, in the mining sector, actually it takes quite long to develop a mine. So it can take anywhere between 7 to 10 years or more, compared to the amount of time it takes to construct, for example, a cathode material or a battery gigafactory. So clearly we are still seeing a lot of challenges in terms of securing that long-term supply. Even in Western Australia, where the mining sector is infinitely more developed, we still see quite a serious shortage at the moment. And what more in other countries where, for example, there's not enough infrastructure in place, not enough policy support or even funding to bring these mines into production. So now we'll move on to talk a little bit about the EV and power battery outlook. So we think that this is also an important statistic to monitor because, for example, the power battery outlook kind of tells you whether the market is going to be more skewed towards carbonate or hydroxide in the future. EV demand also shows you what lithium demand is going to look like and what are some of the considerations that governments or even consumers are considering in this type of climate today. So if you can see, in January, sales for passenger electric vehicles actually fell across most of the major markets. In China in particular, actually, not just the rollout of the subsidies, but because the Lunar New Year also occurred earlier, so that also kind of impacted consumer spending. I don't have the statistic here, but we do see some pickup in February. So I think February was up about 30% from January. But now that, as mentioned earlier, ICE vehicles are also coming in very strongly into the market, this could also impact sales moving forward into March, April, throughout the first half. And we see that not just in China, actually some countries in Europe, they are also kind of scrapping or reducing subsidies for EVs. So this will also impact EV consumption in 2023. And especially, I think, across 2022, 2023, it's been quite an extraordinary time for us, in terms of macroeconomic factors, many black swan events that actually limit or impact consumer spending. So this is also something to consider, I think, for 2023 about how the EV outlook may look like. And I think as EV makers see that, it's been quite a number of years, for example, in China, about 10 years since they started supporting the EV industry. We also do see some shifts in terms of preferences for EVs. So in the past, actually, a lot of people might go for premium models. So those that have longer driving range, more luxurious models, and those would tend to be, for example, NCM or high nickel NCM compositions. And you can see here on the graph on the left that in 2021, actually NCM versus LFP in China was about a 50-50 split. But as we moved into 2022, as lithium prices continue to rise, we also did see rises, for example, in the cobalt or nickel prices as well. So more and more EV makers are actually moving towards cheaper alternatives, which is LFP. So we are seeing a share of about 60% LFP versus 40% NCM in China. Now, in the rest of the world, actually, we also do expect to see some growth in the LFP space. So for example, Ford, Tesla, Volkswagen, they have announced plans that they will be moving their entry-level models towards LFP to cut costs. So this would improve the share of LFP internationally, but we do expect to still see, strong growth in the high nickel NCM space because there are some limitations for LFP. For example, in countries where you have to drive, for example, 1 to 2 hours to get to work, obviously range anxiety is going to be a concern. Let's say you have to drive on a highway, will there be enough charging infrastructure to make sure you don't break down, on the highway? And then in countries where, let's say, you have very cold weather, like in winter, LFP actually loses more performance during cold times. So even in the north of China, we do hear that some people have a preference for NCM because it doesn't lose its performance as much compared to LFP. And finally, to close off, we'll talk a little bit about the EV outlook. So as mentioned earlier, there are some short-term challenges, from last year and this year, perhaps due to the macroeconomic factors, as well as what's been happening, for example, in terms of ICE vehicles in China. But all in all, we still expect to see, long-term growth. So in many countries, there's still strong policy support for the adoption of EVs or investments into public charging infrastructure to ease consumers' concerns about range anxiety. However, one thing that is quite, significant, for example, if you can see on the right side, the car sales in Europe. So the light blue column actually represents pure battery electric vehicles, and you can see that in Norway that dominates. But in every other country, when we talk about new energy vehicles, a large proportion of that actually belongs to hybrids or even plug-in hybrids. Even in China, where we see, a bigger proportion of battery electric vehicle sales compared to hybrids or other types of new energy vehicles, we did see that, for example, BYD, which is the biggest automaker in China, their best-selling new energy vehicle model is actually a plug-in hybrid. And if we talk about the best-selling EV model, it's actually a very small, compact battery electric vehicle, which only has a range of about 120 kilometers. So that's about 20% of what we would usually get from a gasoline car. So clearly, we do see, some shifts in terms of consumer preferences for electric vehicles, which will continue to influence, trends that we're seeing in power batteries, and subsequently the trends that we are observing in the lithium market. So I will quickly close off to add that, apart from the lithium market, we are also looking at cobalt, nickel, manganese. We welcome feedback from everyone. We love to engage with everyone to find out about your views about the market. And if you have any questions, please feel free to reach out to us at battery_metals@sbglobal.com. Thank you very much.